Today we're going to speak with Karthee Madasamy, and Karthee has been here before. You've been here before, Karthee, right?
That's right, a couple of years ago, yeah.
Yeah. So we're going to catch up and level set on how COVID has been, and how the ecosystem around us is evolving, how your fund is evolving, and so forth. So welcome back. It's great to see you.
Yeah, good to see you. Thank you.
It's wonderful that the U.S. at least is turning the corner on COVID. India is a whole different story. Unfortunately, I have several family members who are infected. We had a death earlier in the week, and we have another aunt who is critical at the moment. So it's really a bad situation in India. So I'm very, very sorry for those of you who are in India and experiencing a similar, horrible situation in your friends and family. So be careful, be safe, and let's get started. Karthee, let's catch up. How have things been? What are the highlights of your last 15 months?
Yeah, it's definitely been a weird 15 months. But we've been fortunate to be actually doing our work during these 15 months. We are aware of the situation in India, and we lost our high school classmate as well, which was very heartbreaking earlier this week. So hopefully everybody's safe, and India turns a corner as well. We decided to be active through the pandemic period in terms of investments. We did not take a step back. And the first 6 months of the pandemic, there were a lot of investors who probably took a little bit of a step back. But then since last fall, everybody has come back in. Everybody has realized that technology is probably the way to go forward, and that's where the value creation, wealth creation opportunities are. So it has come back kind of a little bit roaring in a way that nobody expected probably a year ago. We had stayed even keel and invested through the process. So since the start of the pandemic since March, we have made 4 investments, which is kind of our annual pace. So we do kind of seed to Series A, and we take active role in the company. So that's our active pace for 4 to 5 companies a year. So we have kind of maintained that. But I would say today, the activity level is pretty high across the board. We do deep check. Deep tech is probably a little more even keel, especially at our stages, because you need to understand the technology, evaluate technology, why such a technology would work, and maybe there is a little less frantic pace in deep tech, but across the board, it has just gone up.
So let's do 2 things before anything else. Let's talk about the companies that are not the 4 that you've invested in the last 15 months, but the ones before that. How have they fared in COVID, and what are you learning based on the trends and the behavior of your portfolio companies and their experience in the market?
Yeah. We've gone through this roller coaster of a ride. I think initially the first 3-4 months of the pandemic, sales process kind of stalled. You couldn't do in real life demo. You couldn't get the conversation moving from pilot to advanced discussion and getting through a PO process. So it was all slow at the time. So a lot of the focus for the company was to make sure that the cash would last for a longer time. So there's a lot of proactive management in terms of either staff reduction or kind of salary cutting, or in terms of making sure the cash will last for a longer time. But I think a lot of it changed. I think the behavior changed from the customer as well, even big enterprise customers as well, where starting last fall, you could go through a sales process completely on Zoom or completely through video conferences. You didn't have to have the real life conversations or meetups and to get the sales to a close. So we started things kind of picking up. But everybody has kind of figured out a way to now work around that. I think as a venture capitalist, it's really relatively easy to do this over Zoom. But I think as a company with like 100 employees, just managing all the folks through remote tools and through Zoom is definitely has its own challenges. But I think the portfolio companies have done a good job. They all have figured out a way, working arrangement to get the best out of this setup. But the customers started coming back in terms of their behavior changed, going through the finish line just on Zoom started happening, which basically meant that the pipeline started kind of flowing through, deals started closing, and I think starting this year, it's almost feels like they're back in the kind of the normalcy in terms of, okay, here's our projection, here's what we're going to achieve. There is no pandemic related kind of hold up in terms of their projections and their kind of sales velocity and things like that.
Karthee, your portfolio is almost entirely enterprise-focused companies, right? You do B2B enterprise businesses, deep
That's
tech
right.
enterprise businesses.
That's correct.
So,
That's correct.
Let me underscore what you're saying. Is the echo gone? No.
Is there an echo?
Yeah, there's an echo. Is there still an echo? No, the echo is coming out of your line, Karthik. So maybe you have the computer and the phone on. You may need to adjust that. So where I was going with that was, when we started getting into this COVID mode of doing business, not being able to meet in person but trying to still continue doing business. The buyers, the enterprise buyers, were not used to buying technology just on the basis of a Zoom meeting, unless it's a very small deal size, telesales oriented sales flow anyway, which there is quite a bit of. But in larger deals, in larger enterprise deals, that was not the workflow. People were used to meeting in person. So would it be fair to say that one of the lessons that COVID has achieved is train enterprises to buy technology purely on the basis of Zoom interactions?
Yeah, I think that's one of the biggest outcomes. I think people necessities probably drove it. They realized that some of these technologies need to be adopted for their own productivity or their own proper working of their own enterprises. So the biggest outcome of this thing is people actually doing large sales decisions go to the finish line all through Zoom or through largely remote discussions. Yeah, that's definitely the biggest outcome. And I think increasingly people have become more comfortable. Our portfolio has a mix of software plus hardware. And in the hardware, there are warehouses and others have been open. They've been more open through the pandemic than the offices. So some demos, some proof of concepts could be shown to customers at the warehouses, like a robot or like an IoT platform, things of that sort. Mm-hmm. So there was a little bit of advantage to show at least a warehouse, where things can be shown. Mm-hmm. But yeah, in large, I think the biggest outcome or biggest learning is that people have learned a way to work through the entire sales process on Zoom.
Which is going to have far-reaching consequences, because we work globally, and there's technology companies, software companies in particular, being developed all over the world today, and all of these software companies want to actually sell globally to global enterprises. So I think this is going to be a very interesting, learning going forward that is going to make it viable for a much larger number of technology vendors to actually start selling as small startups to be able to start selling to global enterprises. That I think is a very, very positive outcome of the COVID process.
Yeah, I agree. Some of the old rule books could be kind of now turned over. It used to be you had to have a big team here. All those things can be now remote. A lot of people can work remotely. A lot of teams can work remotely and manage this process. Yeah, so I think that definitely enables kind of this global technology solutions, and you're able to achieve a lot more, especially as a small company where you couldn't put like different teams in different places. So I think that's definitely very helpful.
Yeah. Okay, let's talk about you've done 4 deals, new deals in the last 15 months while COVID has been in swing. Do these companies have COVID-related dynamics, or they're just regular deep tech companies that follow, your regular evaluation principles?
Yeah, we didn't change a lot of our criteria because of COVID. We did not, we were not focusing specifically on COVID accelerated businesses. But there are definitely factors that influence some of those things. For example, we did a humanoid robotics company which will go into warehouses and factories called Agility Robotics. And what this pandemic kind of accelerated was this whole e-commerce phenomenon. It has always been a big size of the market, but then it just accelerated. And then more and more e-commerce warehouses and factories realize that the way to increase productivity is by actually using robotics. It's not necessarily replacing people, but you need to add robots along with people to actually get the productivity gains that you need. So there was definitely a factor of COVID kind of helping that, but we would have invested that as a technology, that as a company without COVID as well. So there was definitely impact like that based on COVID. But otherwise, we tried to stay kind of good companies, larger macro trends, how some of these technologies are disrupting the way some of these traditional industries are, behaving or operating. And that's what we went by. And obviously, a lot of them got accelerated through COVID. But we did not put a special lens. We did not specifically focus on, for example, future of work or remote education, things of those nature. Okay. Our focus has been deep tech. So we definitely saw some acceleration of technology adoption, but we tried to stay reasonably neutral.
So let's double click down a little bit on deep tech seed investing in 2021. What check sizes are you writing, and what does a team need to have in place for you to be willing to write that first check?
So we invest between seed and A. So a lot of our stuff is A as well. So we obviously do selectively seed or post-seed or pre-A, whatever you want to call it. And our check size can range from $500,000 to $3 million. Our sweet spot is probably $1 million to $2 million, but we have done we have done $500,000 as well.
Let me actually be very specific, just a second. Let's take those categories separately. Let's take the $500,000 first check into a company as a category. Let's take the $1 million to $3 million as a second category. So it starts with the $500,000 first check category. What does the team need to have in place for you to consider?
So we are a deep tech fund. So we look for clearly differentiated technology, and there is a clearly identified market need, and there is a founder fit to both of those things. Founders have the right either expertise or the motivation or the background to provide the technology and also to deliver products in that market. So we look for those 3 things at that stage. We don't expect revenues at that stage because it's harder at that stage to have revenue, especially for a deep tech company. But we look for very clearly differentiated technology. So a lot of times it might be companies that are spinning out of either a corporate lab or from a university lab where some of the technology has already been built out. So we look for that, and then there is some clearly differentiated aspects to it, and then we look for the market, like what kind of market problem they are solving. They at that stage they may not have done like a one round of either POC or a pilot or anything they may not have done. So we look for a clearly articulated view of here's the market problem that needs solving, and this technology and this product will solve that. And a early team as well. So, and we don't typically invest in companies that haven't come out and started doing the company. So we look for like full-time commitment. So those are some focus metrics or focus milestones that we look for in a kind of a seed stage type of the company where we are writing off $1 million checks. Yeah.
What is your perspective on first-time entrepreneurs? Because a lot of these teams are inside labs or in universities are first-time entrepreneurs, and they're technical founders usually.
Right.
So would you write a check based on a technical founder with differentiated expertise and identified market that they want to go after, solving a real pain that you have some understanding of and they have some understanding of, but not much more?
Yeah, we will do that. In fact, we look for more like hunger, like what you look for is hunger. Sometimes second time, third time entrepreneur may not have the same hunger, so we don't try to look for just the serial entrepreneur. We just look for the hunger. Does the entrepreneur have the hunger to make this happen? And oftentimes in deep tech companies, the initial founders could be primarily tech founders. We look for adaptability. It's okay to be started as a technical founder. It's okay to be the first time entrepreneur. But I think what we look for is, are the founders open to feedback? Are the founders open to kind of giving up some of the control, bringing in business-focused co-founder or business-focused senior exec early on? So we look for those type of things, whether they're willing to take feedback, willing to be adaptable, understand where their blind spots are, and willing to kind of bring in reinforcements in areas where they have blind spots. I think that's an ongoing learning. We always been surprised by people who we thought were reasonably adaptable, but we end up they're not. So it's an ongoing learning. But I think that's what we look for. We kind of lay the terms as well, saying, hey, you need to bring in such type of person to complement your strengths. You need these type of go-to-market capabilities. And these are some of your blind spots. Sometimes it's fundraising. Sometimes technical founders underestimate the fundraising part of it. So we try to explain that, and then we look for people's mindset around that. And sometimes we are wrong, but I think that's an ongoing thing. That's how you keep getting better as well. Nevertheless, we do invest in technical founders, first-time entrepreneurs. Yeah.
In 1Mby1M, our experience has been, it's been a long time, right? We've been doing this for over a decade,
Right.
Is that technical founders can be taught the business side. And we have, I would say one of the big achievements of 1Mby1M is teaching technical founders kind of like this very accelerated mini MBA,
Right.
that really gives them all the pieces that they need to learn to kind of put things in perspective, at least for that early stage, the 0 to 1 million stage. Because the sales in that scenario, well, in a deep tech deal, you're going to spend quite a bit of time just building the product and talking to customers to figure out what product you're building.
Yeah.
You don't really gain anything by bringing in a salesperson at that
Correct.
point.
Correct.
It's a founder-led sales process at that point. So, I almost feel like the missing piece in that
I agree.
is training people.
No, I agree.
Right?
I think we look for more product-focused business people than sales. I agree with you. I think like early on, the sale is done by the founder, and it's really a technology plus solution. But this product management, where what is the customer need, what is our technical advantage, technology advantage, and then how do you build the right product in terms of understanding the customer requirements. Some technical entrepreneurs are very good at it. They can learn, like you rightly pointed out, they have the product mindset. In some cases, they could use help, saying that, okay, here is really what the, yeah. So, but it's not sales, it's more product. Yeah.
Are you finding a lot of, product-focused people who have the experience of bringing products to market, willing to take on very early-stage deep tech ventures as maybe a CEO or a, chief product officer in situations like that? Are they willing to come in early?
Yeah, we're seeing that. We're definitely seeing that, especially folks that have seen some of the either they have seen the problem themselves in a personal life, or they have seen this in their past life, and they have more of a product mindset, and then they kind of team with the technical founder who kind of provides the technology aspects of it. And yeah, we're seeing more and more of that, definitely. And some of the technologies are getting a little more table stakes as well. It's like easier to build as well. For example, robotics as an example. Some of the robotics don't require, like, has become reasonably well understood. There are enough components now where some of the product focused folks who may not have like a lot of technical background, but they're comfortable now to say, okay, we work with the technical founder, and then this is the type of robot that we will build. So we're definitely seeing increased interest in that. So in fact, in the last week, I had like 4 conversations with folks like that, where people were like business people or product people in a different area, and then they identified this market problem because they're very good at that. Like, what is the market problem? What is the need? And then work with find a technical co-founder or technical founder to, and then see how this can be brought to market. And yeah, so we're definitely seeing more of that.
Karthee, can you comment on a topic that we get a lot of conversations around, and I personally had a very bad experience with this issue, which is bringing in an outside CEO. So this is, my story was from a much earlier point of my career. I was very young at the time, and I had built the first phase of the business. I had paying customers, I had raised the venture capital, and I had kind of accepted that my investors wanted to bring in a CEO. And I was the product, really the product slash, I was the product visionary. I had a good technical team. I was doing technical development work in India, which is why we were able to do a lot very cheaply. This is mid-90s, so a long time ago.
Mm.
But brought in a CEO who was basically a first-time CEO who had a sales background, a head of sales kind of background. It was a mistake. It was definitely, and he was an absolute disaster. So, so I'm curious how where in the scenarios where you're doing deep tech investment, where you need to bring in a CEO to manage presumably a very tech-savvy team, going after an interesting market opportunity, what nuggets, what lessons from the trenches can you offer as guidance to our audience?
So it's a very hard question, and I sympathize with you, empathize with you. It's not actually easy to bring an outside CEO. It's not. Oftentimes, it's not the right fit. It's just a more theoretical fit. So it doesn't work a lot of times. So I think the first thing is that be very clear about what the need for the company is, and then bring in a person that's actually going to solve that. So, like you said, a lot of times the immediate response is like, let's bring a salesperson. But for many of the companies, where being only sales focused doesn't happen for a very, very long time. You need to be very close to product. You need to be very close to technology.
I think it's a very big mistake to bring a sales executive earlier on in a deep tech company.
Exactly. So where you're seeing success is 2-3 things. One is where the founders themselves are kind of bought into the idea, right? Because that's very important. It's like, okay, here is what needs to happen, and here is what our limitations are. So as a board, we try to spend more time on that part first. Like, okay, do you agree that this is what the need is? And then and then bring in a person. So oftentimes, instead of over optimizing for the right person, we actually try to see the more over optimized for the fit. Meaning sometimes it might be a person that has worked with the founders in a different capacity in the past, where they may not be the best fit, but in terms of the natural transition from the current founders to the CEO, that's probably a much better option. So we actually look for those type of things where the chemistry, working together, trust is a lot more is there. That's more than the theoretically this is the right person because they have done this before in the past type of thing. So we try to look for that. And then we try to identify some metrics in terms of, okay, what do we define as success and whatnot. So a lot of times we have brought people as a consultant first, like 3 months, 4 months, to see, okay, here is how this is going to work, or here are the parameters that we want to test it out, in terms of working ability with the technologist, in terms of helping really for the go-to-market, in terms of ability to carry the conversation, carry the sales in still a product-minded company. So we try to bring in as this 3-4 months as a consultant to a CEO, and that actually is a lot of the incoming CEOs like that as well, because they have an out as well. Because okay, if it doesn't work, the fit is not there, the founders are not necessarily as flexible as we thought, the willingness to let go is not there. All of them, both sides can figure out. So those have been things that we have seen, and then that way we could find the right fit. But I think more importantly, what we found is that the human element is more important at different stages, and so we try to optimize more for that. Because if the current team rejects the new CEO, then it's of no use, even if somebody's very good. So we try to make sure that buy-in is there. But like you said, try to identify what is the need is an important thing. Because a lot of times people who come from a big company are used to a brand name behind them, used to have a sales force behind them. And especially in a startup, that's not there. So yeah, so some of those things need to be thought through.
And in a deep tech, very early stage, seed stage startup, you can't really afford to lose the technical team. No. So if it becomes a toss-up between the technical team and the external CEO, you have to get rid of the CEO. There's no choice.
I agree.
Otherwise, you have no company.
Yes, that's right. Yeah, exactly.
So now, the last thing I want to pursue today is in your, in the deal flow that you're seeing, in your analysis of the market, what are some open problems that you have identified for which you're looking for teams, great deep tech teams that can solve those problems? Are there any that you're looking to invest in?
So we try to we're more thematic we're more thematic than very, very tight thesis driven. So we definitely look for large tech, deep tech led large transformation in traditional industries like automotive, manufacturing, agriculture, biology. But we don't try to figure out the exact market problem ourselves. That we let the entrepreneurs kind of bring that to us, because they are the ones on the ground looking at the problem day in, day out. So we let the entrepreneurs drive that a little bit. But that said, we definitely are looking at areas around agriculture, like precision agriculture, and then same thing in manufacturing. We definitely see that manufacturing is going to go through a significant transformation over the next few years. The last few years, we are starting to see the seeds being sown into that. So we are definitely looking for companies that are trying to disrupt that. And then the one area that we are now actively looking at is this computational biology, where computer science and electrical engineering is basically influencing the way either drugs are discovered or the whole drug discovery process is managed. So we are actually looking at that as well. We are not going to we are not a biotech fund, but we look for more computer science led innovation in some of these areas. So So those are some of the high-level thematic stuff that we look at. If you look at our first fund, a lot of the thematic was around computer vision and video, because we saw an explosion of that. We continue to look at that as well, but like if you were to look at like going forward, these will be some of the areas, kind of manufacturing, agriculture, a little bit of space, and then computational biology. So those are kind of some of the themes that we think that are large markets that need to be transformed. And these are sectors that spend a lot of money as well, and there's a lot more to be done. So we actively look for companies in those areas.
And the teams you're looking for, do they need to be in Silicon Valley, or what is your geographical perimeter now?
We look at globally, so we have partnerships with early stage funds in India, Israel, Europe. So it doesn't have to be it doesn't have to be in Silicon Valley, or it doesn't have to be in North America. But we are a North America focused fund. And early stages, it's very hard to manage help if they're very, very far away and if their focus is not in North America. And deep tech, that's the one good thing, is that deep tech is deep tech, which means that if it's applicable for one geography, it will be applicable for every geography. And still, in the developed markets, US probably is ahead in terms of adopting new technologies. So many of these deep tech companies, wherever they are, they have a strong focus in terms of selling to US customers. So we look for some plans to be in North America so that we can be helpful as well. But definitely, they don't need to be in Silicon Valley. We just try to focus on where we can help very actively. If a startup is in, for example, India, and primarily only focusing on customers in India, then how are we sitting in Silicon Valley be able to help? So then, in that case, we'll tend to pass on that. So there's no restriction per se, but we look for areas where we can help. And a lot of times, deep tech companies have North America focus, at least at some point, because the customers here adapt faster, and that's okay. So we look at all the companies across the board. Yeah.
All right. Well, very good catching up, Karthee.
Good seeing you, Ramana. Thanks for having me.
See you again. Bye-bye. Take care.